Hello, this is attorney Marc Lopez. I'm here with my excellent good friend and CPA Patrick Wanzer. Patrick, say hello.
Hey, how's everybody doing?
Well, hey, Patrick, you did an amazing service for everyone watching when you talked about the Paycheck Protection Loan last month, and everyone was sending me messages. Thank you for getting this out to us. And everyone thought that the information you gave was amazing. So now I want you back for part two, which is how do we get this loan to be forgiven?
Sure. That's actually a very important piece because there are some specific rules that really need to be followed, and information that needs to be out there so you can get enough of the loan. Use the right expenses to make sure the loan is forgiven. You just need to follow some rules, and we can talk about that.
Absolutely, Patrick. So give us the breakdown. What is the percentage that needs to be spent on payroll? What is the percentage that has to be spent on other things?
Sure. So first, a couple of things before we even get to that. What are the expenses that you can use the money for? Okay, obviously payroll. That's clearly the whole point, is to use it for payroll. But you can use it for mortgage interest if you own the facility, and you can use it to help pay for the mortgage payments, but the interest would be included. Rent, if the lease was enforced prior to February 15th, 2020, rent expenses. And same with utilities, as long as they're enforced prior to February 15th, 2020. But here's the thing, 75% of the proceeds from the loan need to be used for payroll. So you want to make sure if you got $1 million, let's say, just to make it the math easy, $750,000 at least need to be covering payroll. And then the other $250,000 can be used for those other expenses. But you want to make sure you're using at least 75% of the proceeds to cover your payroll.
That's perfect. And so that's like a general framework we have here. Let's take it back even a step farther. So okay. My understanding, and if I'm wrong, correct me, that once the money is dispersed, an 8-week clock starts ticking. Am I right about this? Okay.
Yes, absolutely. So here's the thing is once the money is dispersed, you have 8 weeks to make sure the expenses that you're going to include in the forgiveness are paid. So it's from the date the money is dispersed. Why is that important? Because people's payroll dates are different. Some people pay weekly, some people pay monthly, some people pay every 2 weeks, twice a week, that sort of thing. If for some reason the loan is dispersed on a day and you're only going to get and you pay monthly, you only get one payroll in, that's all that's going to be included in that 8 weeks that can be forgiven. And if money's used for other things, that might have to be paid back. So you want to make sure you work with your accountant, with your CPA, or somebody to make sure that the accepted expenses are paid within that 8 weeks. Maybe that means you accelerate a payroll period towards the end to make sure it's included in the 8-week period, that you get that money paid to your employees, something like that. But you want to make sure that you get the expenses you're going to use to be forgiven within that 8-week period, starting on the date of disbursement of money. So those who have applied for the loan, and let's say they just got through the second round and they got their money dispersed last Friday, well, they have 8 weeks from last Friday to have their expenses. If someone such as you, Mark, on April 13th, you said you got your money, your clock started on April 13th. So that's the difference. Is you got to make sure the expenses are within that 8-week period from the date the money was dispersed.
So the 8 weeks starts clicking, starts tick-tocking, and we have this countdown. And so just people watching this video, they may be savvy businessmen, but they may not be dealing with the payroll ins and out every single day. What is included with this payroll that has to be 75% of the total loan?
Sure. It is gross wages paid to the employee, but does not include the employer portion of the FICA taxes. Okay. So what you pay to your employees, basically the gross wages are what's going to be included. Okay. So that's where you want to make sure that you are keeping track of that and make sure that those expenses that are paid to the employees. Now, you also want to make sure that you aren't reducing your employer's salaries or employee salaries, and you're not letting people go, because that also will affect the amount of reimbursements. If you reduce salaries too much, then they're in the forgiveness calculation, they will calculate an amount that isn't forgivable, and you'll have to pay that amount back. The idea is to make sure you keep people on payroll and you keep them at the same payroll level they were.
Patrick, are the same rules for part-time employees as full-time employees?
It's full-time employee equivalent. So you want to definitely work with your accountant to make sure you're calculating that correctly, to make sure that what you're paying for part-time employees is covered and is covered correctly, because there's an equivalence calculation that they'll do to make sure that works. But you'll definitely want to work with your CPA or your accountant to make sure that calculation is done correctly on the application.
Patrick, what if there is a situation where an employee wants to use some of their vacation time? They're not sick, they're not in danger, they just, they don't want to be on the clock.
Sure. If vacation's covered, I mean, they're paid, they're an employee, they're on the clock. Just because they take vacation doesn't mean that they aren't covered by the forgiveness. The idea isn't for Congress to say, well, none of your employees can ever take a vacation either, that they have 8 weeks, everybody must work. They're still employed. Because you've decided to agree to let them take a week off for vacation, great, that's fantastic. They need to do that. They're still considered employed and they're still paid. So the money you're going to pay them is for salary. It just happens to be a benefit that they're exercising at that time.
And no, that's fantastic news. And then I'm in various groups and whatnot, particularly a lot of lawyer groups, and there's a few situations, I have not experienced this, but there's a few situations some of my lawyer friends have experienced where their employees are making more on unemployment because of the $600 a week kicker. Mm-hmm. And so the employees do not want to come back. And so these firms, these businesses have gotten the money, and now they don't have the employee suspended on. Can you replace somebody, or do you have to use the original employees you had?
Well, it can get a little bit interesting if you try to replace or try to hire new people, because basically what they want to do is they want you to maintain payrolls. And if you have some people where they're making more money on unemployment than they are working, it may be a situation where you want to definitely talk with your CPA and kind of work through that. We don't have a whole lot of guidance from the IRS or from Congress specifically on that, whether a new employee can be hired to take that place. Or if somebody's on unemployment, they must come back. The idea was to keep them off unemployment to make sure that they're still here. So that may be something that you want to talk with your CPA, but we don't have a whole lot of guidance on that. But it is better definitely to have them come back from unemployment than to hire a new person. Maybe it's something where you up their salary a little bit, perhaps. Maybe that's something that you might be able to do in the long run. Who knows? But that is that's a decision that the employee will make on their own as well, going forward.
No, that's super interesting, and I'm so lucky has not had that experience at this firm. So, Patrick, the non-payroll, you already mentioned rent, you already mentioned mortgage, you already mentioned utilities. Are there any utilities that wouldn't be included? Just have to be in existence at February 15th, you said?
Yes, as long as they're in existence prior to February 15th, 2020, you can use the money on utilities. And it's basically just regular utilities that you can have, your heat or your gas and your electric and your internet and those type of things. Those utilities are included. But again, non-payroll expenses can't exceed 25% of the loan amount if you want to make sure all of it is forgiven. There's a little bit of fogginess on whether or not, let's say you have $1 million and you spend $700,000 on payroll and $300,000 on non-payroll expenses. Will they forgive just $700,000? Or will they forgive $700,000 and some of the utilities? We don't quite know. But if you spend $750,000 on payroll, then the whole $1 million can be forgiven. So it's the best bet for people is to make sure that at least 75% of the money that they're spending is on payroll expenses.
And then, Patrick, I work downtown. My office is downtown. Parking for 10 employees, including myself, is expensive. Parking, is that one of the things I can spend it on?
It is not.
It is
unfortunately not. No, unfortunately, parking is not considered an expense that would be. You can spend the money on parking. It just won't be forgivable. It won't be included in the forgiveness.
Got you. And then, Patrick, just the actual process. So most of the folks that are watching this are going to do what they have to do, and they're going to get their information to their accountant.
Yep.
I'm going to get you my stuff. What is the best way to manage the payback? Just give us some tips and tricks. I ultimately want to make your job easier so you are able to spend good time applying for my application for forgiveness as opposed to asking for 10,000 documents. So what can I do on a daily basis or weekly basis to be ready to rock and roll with you?
Sure. The best thing is to keep excellent records on the money that is used from the loan to pay for acceptable expenses. The burden of proof to prove that the money was used for those acceptable expenses is on the taxpayer. So it is important for the business that they have to be able to show that the money they receive from the loan is used to pay those acceptable expenses. There is some talk, and there's kind of a unclear idea of whether or not a separate bank account should have or should be opened for the PPP loan. Some people say that a separate bank account should be open just because you have the money over there and it's easy to track that you're using it for a separate expense. You know, you either pay it out of your general account, reimburse you from the separate account, or pay it directly out of that separate account, that sort of thing. If you put the money all in your operating account, you need to keep excellent records on the expenses that were paid. And it might be something where in your bookkeeping, just in your bookkeeping, you have a separate account set up showing that the expenses were paid from your PPP loan, and you need to keep the documents proving that those expenses were paid within that 8-week window. It is the responsibility of the taxpayer to be able to prove, they have the burden of proof that the expenses paid are within the 8 weeks and are acceptable expenses.
Once the 8 weeks is up, what is the timeline to apply for forgiveness?
You know, that's a good question. We don't know exactly what the timeline is. I believe it's basically you can probably submit the application for forgiveness pretty soon. I know that there is a 6-month window where you aren't going to be having to pay back any of the loan. So it's not like once the 8 weeks is up, you have to submit it in 2 days or else it all has to be paid back. You have a 6-month window. So even if you owe any of it back, you still have 6 months to start making those payments. So that's probably the window, but you'll want to get that application in quickly just so you have it in your mind. A, how much you're going to get forgiven, and maybe all of it. And B, if you do have to pay some back, you can then begin to strategize how you're going to get that money set aside to pay back. The interest rate right now is 1% on those loans, and it's capped at 4%. So it's a pretty good deal on those loans, even if you have to pay some of it back.
Patrick, what question am I not asking you that you think is important? Anything you want to parting words or take away?
Yes, the IRS has just come out with guidance, and this is something that we expected it to happen. We were hoping it wouldn't. But expenses that are paid with the PPP loan that are forgiven are not deductible on your taxes next year. So if you get $1 million and you spend the $1 million on payroll and expenses, you then can't deduct that $1 million on your payroll and expenses because the PPP loan is not taxable income to you either. You're not going to be taxed on it, but then you can't then double dip and say, I'm not paying tax on $1 million, but I'm going to take $1 million deduction over here. We were hoping for that. In a baseball analogy, that would have been like hitting a grand slam to win the World Series. But that just, the IRS has just come out with guidance saying that expenses, PPP money used to pay expenses, that those expenses aren't deductible next year on the tax return.
Anybody hearing that obviously would have loved to be able to deduct expenses that they got a forgivable loan for. But at the end of the day, before anyone gets upset and they start saying, oh, this is ridiculous, they're still net positive from the paycheck.
Absolutely.
Okay. So, I mean, that would have been nice, but you're still better off. Okay.
Oh, sure. I mean, yeah, you're not deducting, the money, but you're also, it's a cash flow benefit to you because you weren't having to worry about having the money to pay the employees, and it's still going to be a benefit, and you're not taxed on it. It'd be one thing if you were taxed on that forgivable money, because generally loans or debts that are forgiven are taxable. But this is specifically written in the statute that it is not taxable. So that's why it's better. If it were taxable, we'd have a huge beef with the law, but it doesn't work that way. So
Patrick, thank you so much for spending some time talking with us. And what is the best way for folks to reach you?
Best way for folks to reach me would be basically by email. pwanzer at somersetcpas.com. That's SOMERSET CPAS.com. Or call me on my cell phone, area code 317-413-7120. Again, we're not working from the office right now, so if you call my office phone, you just have to leave a message, so feel free to call my cell phone, and we can go from there. Somerset CPAs is absolutely ready and willing to help anybody prepare their forgiveness application. Even if you didn't have us help you with the calculation or the loan application in the first place, we definitely can help with the forgiveness application.
Amazing deal. Thanks so much, Patrick.